Hello traders, this is Ala Peters, founder of Fibonacci Trading Institute and Alpha Wave Trader Method. In this webinar, I will be sharing with you everything about Alpha Wave Trader Method, the key to Fibonacci method, and more than anything, I look forward answering your questions. But please, always and forever, spend time reading US government required disclaimers and never forget, I'm not a financial advisor. Everything I do for educational purposes only. So, how in the world did I come up with Fibonacci method? Until 2008, I believed in fundamentals. Until 2008, I listened to CNBC, I paid attention to earnings, and I thought the fundamentals mean so much. In 2008, fundamentals were not working so well. In 2008, market was crashing and burning, and stocks such as this one that had stunning earnings, stunning fundamentals, were collapsing completely. This was one of the top companies in US, Chesapeake Energy. If you're aware what happened with Chesapeake Energy in 2016, it's quite a tragic ending for one of the most respected CEOs in United States of America. No one could understand why Chesapeake Energy was crashing. I could not comprehend that until I got to work more than full-time with Fibonacci, and I started recognizing very clearly, market is flawless Fibonacci puzzle. Market moves according to Fibonacci. Every single support and resistance level, every single trend inception and trend reversal level formed by Fibonacci far in advance. I show this in a trading room on S&P Mini every day, and I teach traders from beginner to hedge fund trader how to identify these levels that I developed in 2008 on any instrument and any time frame. Total of time invested in studying Fibonacci, 20 plus years. Since 2008, more than full time, well above full time. So, method I developed has 4 key rules for entry, stop, and target. All the stops and all the targets involve price action and Fibonacci only. No indicators of any kind are used. Here's an example of what I'm referring to. If I will give you this chart, if I will ask you a question, what instrument is this? Why would it matter? If you master price action, if you understand how price action moves, none of that matters, because price is the same on any instrument. So let's pick a choice. S&P, fabulous, fantastic. This is S&P. Let's change it to next instrument, because I would imagine most of the traders here who are day traders in US trade S&P. Let's take a look on this chart and let's see what instrument is this. What is it? Why would that matter? Price action is exactly the same on any instrument. You master price action, all you have to do is identify what's appropriate for you, your account size, your risk management, your psychology. Market moves by price action and Fibonacci only. And spending so many years studying price action and Fibonacci, I will show you every day market is flawless Fibonacci puzzle. It's not crude, it's Apple. It doesn't matter what it is. Magic happens if you remove all the indicators from your chart, as every single indicator on the planet is delayed, developed after the price. You will see very clearly. Price keeps repeating same patterns time and time again. Here's a chart from our day trading room that's been present in our day trading room since September. All Fibonacci levels remain the same, strategies are different. Hourly chart is a guiding light for day trading entries. Pay attention what happened with the market on September 30th. This is where buyers came from. This is Fibonacci Reversal Zone, as you can see very clearly the name of this level. This is institutional support. Rules are met, you take a trade. When we arrived in the markets on Friday, it was extremely clear. Bias at this level firmly bearish. The entire week we witnessed extremely ranging markets. When price comes to reversal zone, you do not acquire trend position. It doesn't matter if it's S&P hourly, it doesn't matter if it's Apple monthly. No matter what the earnings are, no matter what fundamentals will tell you, no matter what indicators will tell you, price would reverse completely from Fibonacci levels 80-85% of the time on any instrument and any time frame. And this is what we've done in a trading room. Bias bullish from key Fibonacci support, bias bearish from key Fibonacci resistance. Every time. And that was S&P for many, many weeks. And this is the levels that continue playing out. And if you know the rules, you know what to do. Time and time again. And this is where market was this morning. As I spelled out since yesterday, when our bias remained bearish. When price will reach this level, you know the rules. This is institutional support. This is where you monitor for long. And this is where buyers stepped in from. Clear on that? It's on your end, Clinton. So, when price comes to reversal zone, you do not acquire trend position. When price comes to reversal zone, you monitor for trend reversal. Here's few of my favorite examples. Here's Apple last year. In 2015, Apple had stunning earnings. When Apple was at 130, Apple was coming out with phenomenal, spectacular earnings. So why in the world did it crush 40%? On January 25th, I said, when Apple will reach 93, it will stage bullish rally until 111. That's what's stated on January 25th. Agree on that? Here is Apple. Let's take a look on Apple and let's discuss what happened on Apple. Apple staged powerful bullish rally from 93. I said when Apple will come to 111, it will be the end of the minor bullish trend. Here is Apple. Let's take a look. What happened on Apple? Apple reached crucial Fibonacci support 92.43. Staged bullish rally. And what has happened at this level? Anyone surprised? Price reversed. Bullish trend is minor. Price keeps repeating this exact same dance time and time again. No matter what instrument, no matter what time frame. Gary, please adjust the settings on your screen. Every person has different resolutions. So, it is all depends on your resolution. So, that's what it's all about. Extremely important to recognize. Is everybody else seeing my entire chart? Yes, as you can see, Gary. Everybody's computer is different. It's very important you adjust your chart. Exactly. Click on screen sharing, click on cross-like icon and set your settings. So, do you remember when Apple came out with the worst earnings in 13 years? Do you remember that? Apple was here. Worst earnings, and Apple again at 93. So why in the world Apple came out with the worst earnings in 13 years, but it rallied this much? How do you explain this? Phenomenal earnings at 130 and Apple collapsing. Earnings don't mean a thing. Stunning earnings, price collapses. Terrible earnings, price rallies. Happens all the time. And that's exactly why I show you and prove to you every time. Fibonacci, much more accurate than any earnings, any fundamentals will ever be. Fibonacci is the only predictive tool in the market. If fundamentals, earnings, and indicators worked, everyone would have been Bill Gates. If you spend enough time with Fibonacci, if you witness what I teach in Fibonacci class on Friday, you will never see markets in the same lights. Moes just started the course. Moes, feel free to share his third day in the course. Here we are. Apple rallied as expected from key Fibonacci level. So, here are a few of my favorite screenshots that show you very, very clearly that news and earnings are just a bunch of noise. You must respect news and earnings due to volatility, but everything preset into price by Fibonacci levels far in advance. If there are any oil traders here, thank you, Moes. None of that matters. Not a head, not a shoulders. We're not using any of those terms. Remember oil, we were in a trading room on September 22nd. All recorded, all posted on my blog and YouTube channel. Oil at reversal zone. We have the most spectacular, most powerful bullish news since 1999. Most bullish news in 18 years. And I say we're at Fibonacci Reversal Zone. Long is not an option. Oil collapsed 500 points. No surprise here. As we've been discussing in the room, when price comes to reversal zone, monitor for reversal. 500 points later, where buyers stepped in from. And that's how price moves. Fundamentals and earnings are just background noise. Fundamentals and earnings are simply Excel spreadsheets filled in by company workers. And indicators are delayed. So, learn the rules and decide what you want to trade using price and Fibonacci only. No software, no indicators of any kind. Ask Moes any questions. His third day in the course. This is all we concentrate on. You never need anything else. Proprietary Fibonacci tool and pure price action. Do not block your vision. If you spend years investing money into indicators, you didn't invest time into knowledge of price action. You invested money and effort into indicators. But if you pay attention to price, you will know extremely well that the most crucial moment in price action is knowing where trend inception is. As indicators will tell you only how market behaved after the fact. Indicators will not tell you months and years in advance what to expect. Here's an example. And I love answering questions of new students in Friday Fibonacci class. Why in the world is Wells Fargo collapsing? Because of the scandal? Really? If you asked me this question 2-3 years ago, I've been saying forever, Wells Fargo will reverse from 58 because this is Fibonacci Reversal Zone. And this is what Wells Fargo had done. Scandal on Wells Fargo came out when Wells Fargo was already at 50. I will gladly take a look on Wells Fargo next, but as you could see, all the levels in front of you and where Wells Fargo is heading next. It will give you a bit of a bump at 42, and that's when it's going to become very interesting at 36. That's Wells Fargo. This level's been spelled out by the price years in advance. If you are an investor and position trader, you pay attention to weekly and monthly chart. If you are a day trader, you're paying attention to hourly. This is your guiding light. This is what I teach in 8-week course. Some students learn everything within a couple of days. Ask Mois if he knows the key rule in the course that's been playing out entire post FOMC release non-stop. Know when not to enter. You always acquire position from as low as possible, not as high as possible. As I've been warning post FOMC release. Acquiring long here, not an option. This was the exit on the long. And that's how price moves. And what price will do next at this Fibonacci support is crucial. Rules must be met. No indicator on the planet will give you rules. It's killing me when people come to me and say, I'm trading S&P with 2-point stop and 2-point target. Really? When market give you correction, you do that? Ouch. How many hours did S&P dance in correction recently? S&P been dancing in correction since Monday, probably 40 to 50% of the time. If God forbid you're using indicators such as moving average crossover, what has happened if you were in the market on that day? Do you remember that? Let's take a look. This is the most crucial aspect in your trading. When not to trade. This was S&P on that day. This is ultimate correction. This is the key. When not to trade. Market give you corrective fluff 40% of the time. If you are using moving averages crossovers in corrective markets, by the time you take short, you're supposed to reverse. Market is not tradable at that time. Holiday market conditions, market in correction 80% of the time. Moving averages are flawless and stunning in trending markets, which play out 20% of the time. The only thing that's constant is price and Fibonacci. Everything else delayed. Everything else will never be as accurate. So, 99% of students who come to the course had been in trading for at least 2 years. They learned and witnessed very, very clearly that every indicator on the planet is delayed and following indicators not producing much. So, this is a chart of one of the students that's been trying for 20 plus years. The investment of over $400,000, and I asked Jim question. When we work in private mentoring, we work one-on-one via screen sharing. Jim, so tell me, where's the price? He says, it never crossed my mind. All these years, I've been paying attention to flashing green and red lights, stochastics and lines. I say, why? Oh, why? Every single stochastic, every single green light show you what is expected after the fact. When in fact, why not pay attention to the price? You'll be amazed how much you will see if you just remove indicators. Here is few of my favorite examples, blast from the past. As we're witnessing quite interesting times on oil, gold, euro and pound. This is chart on oil that's been present in the room for the last 5 years. Does this look familiar? It's identical to S&P hourly. Do you see that? Exact same structure, exact same strategy. The only difference is Risk management. The only difference is, are you holding your position for a day or two? Or are you holding your position for years? Or a minute or two? This is long-term levels. This is the key of Friday class. For years we've been discussing when oil will come to 30, expect bullish rally. For years we've been discussing that 50 will be a war zone. Price is stuck here and been stuck at this Fibonacci resistance how many months? Many. Months 1, months 2, months 3, months 4, months 5, months 6. Ouch. Quite a problem. No surprise here. No knowledgeable trader ever acquires position into this level. You learn the rules and you buy as low as possible. As graduates of the course been emailing me, acquiring position at very trend inception, as this is the core. What price does at trend inception. And this is what happened on oil in the last few years. This was crucial Fibonacci support. This is decision point 1. This is the end of the minor trend. The end of the minor trend is always present. Reversal zone is not. When oil broke through the end of the minor trend, trying for 4 years, market went into free fall. It means bearish trend became major. This is where you monitor for reversal. But you cannot trade Fibonacci randomly without rules. You must wait for rules to be met, and only then you take a trade. The rules had been met. Bullish rally in a progress. Jumping on oil randomly on monthly chart, not an option. Price right now can retrace as low as possible. This Fibonacci resistance is respected, and it remains a brick wall. If you're an investor, if you're a position trader, monthly chart is crucial. These levels remain intact for many years to come. Rules are met, these levels will no longer be valid. This level is broken, oil will head to 60, but acquiring position randomly not an option. You must know where your entry, you must know where your stop is, as risk management is everything. So, one of my favorite charts of all times is weekly. Weekly chart is one of the cleanest charts ever. Has no junk, has no noise whatsoever. This chart had been present in a trading room for the last 2 years. The emphasis had been on 1800, crucial Fibonacci support, crucial reversal zone. Remember day trading chart on S&P? All the same formula. So, what is happening on S&P currently and what are we expecting? Bullish rally is reached, the end of the minor trend. Looks familiar? 200 plus points later. This level been present in the room for months. This is what we've been discussing with students in the months of June and July when S&P had been forming extremely sluggish formations for 2 months until collapse on that famous Friday. On weekly chart, sellers are in charge. On day trading chart, buyers are in charge. So, are you investing in S&P index fund that you're holding for years? Or are you trading 3-minute chart? What chart you trade, only you can identify. Same exact strategy as on hourly. Totally different risk management. If you are investing and trading on weekly and monthly, you're holding position for years. If you are trading based on hourly, you're holding position for minutes. And that makes a world of difference. So, this is all you ever see in a trading room, Fibonacci levels I had shown you. This is all that matters. Here's a blast from the past. Love, love, love. Sorry, there are guys here from Europe, girls here from Europe. My heart goes out to you. Those of us Americans, my heart is singing for us. Why? Here are a few charts. Here's a blast from the past about euro. Remember euro 3800? Where's euro now and what to expect on euro? This is where euro is and this is what to expect. Remember what I said in 2014. This was the end of the minor trend on weekly. 3400. As you know very clearly, weekly end of minor trend had been broken, just like that level had been broken on oil. This is Euro monthly. Sorry everyone in Europe, but this level will be broken. We Americans not gonna be poor for many years to come. Euro heading next to 87, after that to 60. And Fibonacci said that many, many years in advance. Clinton, you can come to the website and I can show you where to find the webinars. Webinars are different based on questions. So those of you guys who cannot stay, let me show you. First of all, you can find webinars on YouTube channel. Second of all, section on about, webinar about Fibonacci method. Under about. That's where you can find it. Latest one on YouTube channel. So, this is Euro traders. Just like the end of the minor trend was broken on weekly, it will be broken on monthly. And this is pound. Pound in free fall. As we know, pound well outside of decision point 2. Pound made it to 119 already. Time and time again. Clear on that? Clinton, please see suggestion from George about sound. And that's how price moves every time. Market is flawless Fibonacci puzzle. If you remove all the indicators from your charts, if you recognize fundamentals and earnings are simply sensational things, if you just pay attention to the price, you will know what to expect if you apply proprietary Fibonacci levels and proprietary Fibonacci rules. You cannot trade Fibonacci randomly. That will never work. When people come to me or call me and say, I am trading Fibonacci, I say, what level? He says, all the levels. How is that possible? What is your most important rule? The most important rule is, of course, know what not to enter into. If you do, it helps your discipline. As Fibonacci is the only highly accurate key concept for profit targets. You buy from Fibonacci support, you sell from Fibonacci resistance only if rules are met. Here is gold. This chart been present in front of you for years. When website started in 2011, my heart was going out when I saw advertising on all the major channels, buy gold. Oh, why? Fibonacci Reversal Zone is reached, just like on Apple at 130, you get the heck out of your position. Market will crush and burn 85% of the time, instantly. What did gold do from Reversal Zone? How in the world did I know on February 2nd that gold would rally? This is what I said. Gold is heading to 1300 on February 2nd. Gold reached 1300 few months later. All the levels present currently. No surprise here. Most important rule in a play, here comes the selling pressure, which most probably already know. Day 3 of the course, where selling pressure comes from. No surprise. Combination of crucial Fibonacci resistance and most important rule you learn in the course is present. This is why gold is selling off. Thank you, Moes. Day 3 in the course. And you know the most important rule. And that's the reason I live and breathe what I do. Because my students become my dearest friends. I teach you how to fish. All you have to do is identify what kind of fish you want to catch. Absolutely up to you. If you're a day trader, Fibonacci will give you accuracy no indicator on the planet will give you. If you're an investor, position trader, and options trader, these levels will show you with incredibly high accuracy where to enter and where to exit far in advance. Using proprietary Fibonacci tool that you can install on any platform. Gradients of the course on MT4, on Thinkorswim, on TradeStation, on Sierra Charts, on interactive brokers, on platforms I never even heard of. Using Fibonacci tool. Utilizing strict rules for entry, stop, and target. Without rules, Fibonacci retracements cannot be traded. That is absolutely crucial. If you respect the fact that you must play football based on the rules, how can you day trade without rules? How can you invest without rules? If you respect that you cannot drive without rules, how can you speculate in day trading? In investment decisions, perhaps you can forget about what your account looks like, but in day trading, it looks at you every day, if you play by the rules or not. And Fibonacci certainly help you discipline. If you know where Fibonacci levels are, you know what to enter, and you know what to trade from. Here is oil. This was oil. Those of you oil traders who were in a trading room, I will appreciate if you will confirm. This is where we were since last week. And I said oil is heading to here. And here's oil this week. Tomorrow in the trading room we'll have a lot of fun, which we always do. Thank you, Clinton. During oil news, as all the levels will continue in a play. Oil is heading to here. Crucial Fibonacci support. What oil will do at this crucial Fibonacci support is absolutely crucial. Only if rules are met, you should take a trade. As you can see very clearly, oil struggled to break through this Fibonacci support. It had taken oil many hours, 20 plus hours, to break through this level. You never short near. Ever. You short well from above. So, what oil will do at this level tomorrow will be crucial. Will we see as powerful bullish rally as we saw last week? That would be lovely, because this is absolutely essential and crucial support. Do not short anywhere near 49. This level been present on hourly for over a week. This level had been crucial resistance. Took oil days to break through this level. This is where buyers came from time and time again. Will oil do exact same thing tomorrow? Oil staged bullish rally from this level last time on Sunday. So, if you'd like to join us in the trading room, you can sign up on the website. I promise you, you will receive an invitation next Tuesday. If you do not want to wait next Tuesday, I will guide you to the website, because it's always exciting event. As again, the event on that day that I shared with you, as posted on my blog and YouTube channel, you can find it here. Oil news is always a lot of fun, as I always project to you levels far in advance. If you come to the section on my blog, you can see, going back years, various videos, various analysis, various oil news. Oil news is always fascinating. 99% of the time, you will witness instantly the accuracy of the method and the importance of respecting news only due to volatility and nothing else. So, let's say a few other things about Fibonacci, and I look forward to answering your questions. Why fixed stops and speculative entries do not work? Because as Mo as know probably already, on the third day of the course, price tells you on every single trade different stop and different target. You cannot ever succeed with fixed stops and fixed targets. It will not work. When market is frozen, when market is not moving, stops are extremely small. But if I will browse right now on my blog and go to the months of January and early February, when we had the highest volatility on record since 2011, stops of 1 and 2 points were finished in a matter of seconds. Stops were 8 points on 1 to 2 minute chart. The volatility was exceptional. Moves in the market were giant. Here is an example. Trying to get there as soon as I can. So, I'm already at March, trying to show you examples. 1 second. Because there is absolutely nothing in common with market structure in February and January as happening in the market in the months of June and July. So take a look. This was typical day. S&P 25 points. How often do you see it recently? Does it exist? Not possible. Next day, 13 points. Next day, 13 points. Anyone surprised? Do you remember, were you in the market? 9 points, that was a slow day. 10 points. Why in the world was so much volatility? Simple. Every single day, 9 and 10 points, one trade is a slow day. Volatility highest on record. If God forbid you trade it with 1 or 2 points stop, ouch, not an option. This is where S&P was. S&P was here. Monthly levels are institutional levels. This was ultimate test on S&P. This is where bearish correction had ended. This level's been present in front of you for the last 5 years. And this is where you saw phenomenal institutional volume. As market moves were very, very powerful. You're not seeing that here. Institutions buying at key Fibonacci support on monthly. Larger the time frame, more powerful the volume. And that's what was happening in the months of January and February. Fixed stops, 1 and 2 points. Worst idea ever. 1 and 2 points in the months of June and July, perfection. Not when volatility was at VIX 30. Price show you every time where your stop, where your target must be. It doesn't matter what you trade. It doesn't matter if it's oil monthly. It doesn't matter if it's S&P 1 minute chart. The same exact strategy you learn in the course applies to any instrument, any time frame. Doesn't matter what you trade. With the exception of Friday class, where I constantly encourage you, what you learn in Friday class, you do not apply to charts smaller than hourly. Price action patterns form Fibonacci waves using Fibonacci golden ratios sequence. This sequence present in everything that surrounds us. No matter if it's market, no matter if it's flower, no matter if it's reflection in the mirror. Everything has Fibonacci golden ratio sequence. This is how market moves, based on this formula. If you're a knowledgeable trader, you would never trade numbers that are not Fibonacci. My absolutely favorite number of all times, staring at you. Most powerful Fibonacci number forever and ever remains 21. As Mo is witnessing his third day in the course, the accuracy of that number is astonishing. Not 22, not 23, 21. And that's golden ratio. And that's how market moves. Fibonacci spiral, Fibonacci symmetry starts by adding two subsequent numbers. And that creates this spiral. And that's how market moves. And if you know how to identify this, your trading goes to entirely different level. This is what I will be teaching in Friday class. This is what I was teaching on Mo's first class on Monday. As you can see, he's commenting correct and he understands a lot already. Here is the basic principle. Here is the rule number 1. Trade only wave 1. Never wave 2, never wave 3, never wave 4, never wave 5. That's the key. Without it, nothing is possible. If God forbid you're acquiring position at the end of the trend, at the end of wave 3, ouch! Here comes surprise. Here comes reversal. Never, ever acquire position into reversal zone. Remember that Freaky Friday on S&P on October 7th? That was marvelous reminder. Stunning bullish push and complete collapse. Remember news on oil, the most bullish news in 18 years? Did not mean a thing because that's where oil was, at reversal zone. You do not acquire position here. If you do, your success rate less than 20%. Fibonacci will override any news. Price comes to reversal zone. You monitor for reversal. And you take a trade only if rules are met. And that's the key. Inception of the trend is everything. You never trade against the trend. You never touch wave 2 and wave 4. And you understand always and forever. This is what price does every time. If trend is major. If trend is minor, price forms only 3 waves. And that's the reason you would never acquire position at the end of wave 3. And that's what I teach every day. And that's what we recap after the trading close. And that's what you're witnessing on NASDAQ. Same 5-wave pattern. That's all there is. That's what price does every day on any instrument, any time frame. You just have to make sure you get rid of background noise. You just have to make sure you know what corrective markets are. You just have to make sure you do not get stuck where you're not supposed to, in no man's land. When market dances at reversal zone, in endless corrective fluff, you do not participate in the market. You wait for your rules to be met. Doesn't matter if market's ranging. Doesn't matter if market's trending. Fibonacci levels respected every time. So, there are graduates of the course who trade Fibonacci levels long term via options on ETFs and stocks. But when it comes to day trading, accuracy is the key. And wave 3 will always be the core of alpha wave trader method because it is always present. Wave 5 is not. And as you're witnessing, nothing good happens here if you acquire position at the end of wave 3. Nothing happens here if you acquire position at the end of wave 3. So when I hear people, what happened with momentum? Why did price reverse? That's exactly why. It came to Fibonacci level. And that's exactly what bullish rally on euro had done at the end of very powerful bullish rally. It reversed from Fibonacci resistance. Crooked oil structure respected Fibonacci levels. Exact same way as Euro 3-minute chart. This is one of the cleanest charts ever. This 1-minute chart actually resembles weekly charts. You don't see this often on 1-minute chart. As you learn in the course, you do not ever trade 1-minute chart. 1-minute chart is a barometer chart. 1-minute chart gives you heads up if you're a day trader. This is stunning, flawless, cleanest 1-minute chart. If I remove word 1 minute, you would think it's weekly. Larger the time frame, less noise it will have. In summary, price give you where the entry is. Fibonacci show you where the exit is. No software, no indicators used of any kind. This is what you pay attention to. This is what you master. You install Fibonacci tool on your platform and you identify what you want to trade. If you decide to join us in the course, in the months of October and November, it's my favorite time of the year. We're in a bootcamp. Trading room closing effective November 1. We're down to 10 spaces in a bootcamp. Bootcamp is part of education course at no charge to new October and November students only. Graduates coming back to recap what they learned in the course and learn new additional strategy that will be introduced in the bootcamp. Strategies that show you how to separate weak versus powerful trend inception. Genesis is a strategy. Savings of the bootcamp, $888. So, you join us in education course, bootcamp automatically included. After the bootcamp, November 16, we all take well-deserved vacation. We come back after November 29 or 30th. I'm still thinking if it's worth waiting for the 30th because it's right after Thanksgiving week. And we will restart again for the months of December. Thank you, Moes. Means the world. So, under Learn, I would highly encourage you, please review everything in education course and always and forever. Listen to the graduates of the course who trade anything and everything that has price. From day trading S&P to trading stocks to trading ETFs to trading options. What is happening, SoundCloud? Thank you. And that's a key. My students become my dearest friends for life. Hello, you can go a little faster. So, if you have any questions, please do ask. Hopefully, eventually, it will finally load up, unless my tech support right now working in the back of the website somewhere. If you click on testimonies page, you can review the testimonies and you can listen to them. Let's hope it will load up when I'm answering your questions. So under About, you can review anything and everything about method. You can watch the webinars. On YouTube channel, you can watch multiple video examples from the trading room. On the blog, you can review the latest posts. If you ever would like to contact me, please click on Contact Us and never hesitate to call me or email me 925-257-4298 or info@fibainstitute.com. Пожалуйста. So, ladies and gentlemen, any questions? What instrument would you like me to analyze? Pretty please let me know. So here's the page popped up that I was promising you. Here we go. As you could see, graduates of the course trade options, trade S&P, trade Forex, trade ETFs, trades anything and everything. Okay, when you're posting a time frame, it's absolutely crucial. Absolutely crucial you post the time frame. Are you asking me to look on hourly or are you asking me to look on yearly? Hourly levels will be very different than monthly levels. Hourly levels change a couple times per day. monthly levels change every 4, 5, 10, 15 years. So please make sure you are posting the time next to the question. So if you would post the questions, I will set up the chart and I will answer all questions at the same time. Does system predicts fun and games in DB? I don't know what DB is. Deutsche Bank? Is Deutsche Bank DB? I'm shocked that actually, believe it or not one person on the planet asked me about Deutsche Bank. DB, marvelous question. Look on DB. Let's go straight to DB on monthly. Shall we? Deutsche Bank DB. Look on monthly. Ouch. I'm absolutely crazy about monthly and weekly chart. They have no noise, guys, none. That's why I constantly encourage my students, pretty please, use Fibonacci when making your investment decisions. Is anyone surprised where Deutsche Bank started its collapse? So, let's take a look what to expect on Deutsche Bank right now, shall we? Volume in front of you. You don't need to plot indicator volume. You look on the charts and you know the volume. You don't need anything. This is the alphabet of the market. Show you the volume every time you look at the price without anything blocking it. So, what are we expecting on Deutsche Bank next? This is where Deutsche Bank is now. This is Deutsche Bank monthly. Sitting very, very pretty at decision point 2. As Moaz will tell you, it's absolutely crucial trend target if you ever day trade. When it comes to long-term level, it's the least important support in the market. Deutsche Bank can be stuck here in correction. This is your range. How long Deutsche Bank will be stuck at this level, I don't know. You do not short ever near this Fibonacci level. Deutsche Bank stuck in correction. If you've been shorting Deutsche Bank, you trail at 15. You are not acquiring position. Absolutely no reason whatsoever to acquire long. If you are short, it's a good idea to adjust trail to 15. Shorting right now into support on monthly, not an option. As a day trader, it's a very different story. Is that the question? Shall we take a look on hourly? So, I don't have to change the levels. I can show you what happened. Is everyone clear how important this Fibonacci support is? Is anyone surprised? Very big difference, hourly versus monthly. Would you like to see where the seller's coming from and why in the world this is happening? Because, as Moaz will tell you, bullish rally came to exhaustion levels. As a knowledgeable trader, you acquire position here. Inception of the trend is everything. This is not the place to acquire Deutsche Bank. You wait for retracement. You do not acquire position randomly at this level. Thank you, Moaz. Such a pleasure having you on board. So, this is what's happening with Deutsche Bank. This is why it's in massive correction. It's fluff. Cannot buy, cannot sell. As a day trader, you're witnessing very powerful retracement on October 2nd and 3rd. You're witnessing how Fibonacci support had been respected. So if you're acquiring position before reversal zone as a day trader, this is your last chance to enter. Entering at reversal zone, not an option. Market in excruciating pain. Massive corrections non-stop. Next question. GBPUSD. Chandler. No time frame posted. I will bring up the first one. I had shown GBPUSD monthly. Correct? Did I do that? Yes or no? Yes, I did. So, this is GBP on hourly. Remember my monthly chart? As I'm telling you, GBP is not done. It collapsed to 119. Agree? So even if you look on one of the very last posts about GBP, how did I know GBP is heading here? And is everyone clear how important decision point 2 is? This is GBP. So, GBP, pound, dollar, 1 hour. Let me show you what to expect. And again, you can never trade Fibonacci levels without rules. Pretty please remember, you learn Fibonacci levels, only then you can apply options to these levels. Two things I'm jealous of in life: option traders and ballerinas. I got kicked out from ballet because I was way too tall. And options, I wish I had patience for. So, if you're trading options, it's the best way to trade, as I hear from students who trade options, credit spreads and such. So, pound dollar hourly. No surprise where bullish rally came from. Agree? Right now, bullish trend is minor. This is your range. You do not short into this Fibonacci support. You do not buy into this Fibonacci resistance. Market in correction. As a day trader, you are on sideline. Market been in correction for the last 3 hours. You would not be sitting and staring at the screen if you understand what correction is. Agree on that? Price struggled for 4 hours, 6 hours to break through this level. This is the end of the minor trend. This level is always present. Finally crushed and burned to reversal zone. Never short near. So if you have a trade on 5-minute chart to the downside, but you know you have reversal zone in front of you, you would never short near. If you do, success rate 20%. Shorts into reversal zone, not an option. Next question, gold hourly. Marvelous question. Gold may be giving another opportunity for re-entry. On weekly and monthly charts. So let's take a look on gold hourly and where gold is currently. So here's gold, traders. So here's one of the examples. As you saw on oil, the most powerful bullish news in 18 years did not mean a thing. Here's collapse on gold. Boom. Ouch. How come such spectacular collapse reversed? Anyone surprised? How come price is struggling so much to break through this support? Buy from Fibonacci levels, not into Fibonacci levels. Agree on that? What is gold doing right now? This is your range. So if you have trade on 5-minute chart, you monitor for short from here, you monitor for long from here. This is your range on gold hourly. If gold will crash and burn to reversal zone, magic. Monitor for long. Monitor for trend inception. But never, ever acquire position near this level. This is the most crucial resistance. This is where oil struggled for so many weeks, it's been unbearable. Looks familiar? Non-stop brick wall. End of minor trend. Last week, first time it blasted through. It's been here for many, many months. Identical strategy, identical level on gold hourly. So, next question, DB daily. Simon, I believe we answered question on DB. I will gladly open up daily chart. Please, one question per person. Is Simon still here? Already answered? Okay, ES 5 minutes. S&P right now is not open. There is nothing happening on ES 5 minute. Nothing happening whatsoever. Zero, zilch. I will show you what we discussed with students as a trade on S&P 5-minute chart this morning. This was a trade on S&P 5-minute chart. You're acquiring position as low as possible. This is your key target. When price comes to decision point 2, you move your stop to break even. Joe, you're breaking my heart. This webinar been everything about no software is offered. It's software free course. You apply Fibonacci levels on any platform you choose, and absolutely, as you can listen to Forex traders on the website, you can apply it to MT4, you can apply it to platforms I've never heard of. As students from Singapore to Middle East, from Florida to trading soybeans to trading God knows what. What you trade is your choice. So, this was S&P 5-minute chart. Struggled to break through key Fibonacci resistance first target. Came to reversal zone and reversed. Never acquire position into reversal zone, not an option. 80% of the time, complete reversal. You will buy it well before reversal zone. So no surprise where S&P is now. Agree? Same exact levels as gold hourly. Totally different strategy. Exact same levels. You identify. Do you want to trade oil weekly? Do you want to trade Apple monthly? Or do you want to trade S&P 5-minute chart? Every single person has different personality, has different financial circumstances, has different account size. Some people love to make a decision in split second. Some people cannot comprehend. How can you possibly be in front of the screen for hours? One of my dearest friends who finished the course, who became my dearest friend after the course, told me, I got it. I'm not a day trader. I'm an options trader. I love to hear that. I love when people become self-aware because every single person is different. And being self-aware of what's appropriate for you is crucial. So, last question, MOS. INTC. Too many charts, my only complaint. INTC. If anyone has any other questions, pretty please do post. And again, never hesitate to call me or email me with questions. I live and breathe Fibonacci. So, INTC, is that correct? So, I want you to be extremely careful. Is that, what stock is that? MOS? I've never looked on INTC. Please tell me. INTL. I'm not fond of trading stocks on hourly charts. Anyway, if you're trading stocks on hourly charts, please talk to me. You need to make sure you have very accurate data. As you learn in the course, data is everything. If God forbid you have wrong data, ouch. So look on INTL hourly. Everyone clear about the importance of reversal zone? Do not enter into. If you are trading stocks, you have reversal zone in front of you. It's exact same as S&P 5-minute chart. It's exact same as Euro monthly. So, INTL reversed completely October 5th. INTL reversed completely October 10th. Why in the world are buyers coming? Let's take a look. What is happening here? Why can't you short at this level? Simple. Take a look. It's Fibonacci support. That price spelled out days in advance. No ifs or buts about it. It's reversal zone. And that's how price moves every time. Never short near. Spectacular collapse, ranging markets. INTL reversed from reversal zone of the bullish trend and now sitting at crucial Fibonacci support. So, last question, oil 5-minute chart. If you're trading oil, you're an accomplished trader. You already doubled your account elsewhere. Very low liquidity, extremely high volatility. So, here's oil. Here's Fibonacci Reversal Zone on oil 5-minute chart. You acquire position as low as possible. Decision point 2 is your target. And price comes to reversal zone, you exit. You're witnessing how crucial this level is? And that's how price moves. Doesn't matter if it's Apple monthly. Doesn't matter if it's oil 5-minute chart. Same exact levels, very different strategy. What strategy you use, what chart you trade is your choice. So, if you decide to join us in the course, all you have to do is sign up online. You will have instant access to all the materials. You will be in the class tomorrow morning 9:15 EST. Key Fibonacci class on Friday morning at 11 a.m. Please remember, trading room is always closed on Fridays. Only education courses open. So, you interested in joining us? You have any questions? Pretty please review these 2 sections online. And then feel free to contact me. Agree? If you're considering taking private mentoring, pretty please call me, speak with me first. Because we have to make sure it works with your schedule and it works with mine. You will always and forever have access to all group sessions when you sign up for private mentoring. Private mentoring twice as long with annual follow-up. What is the difference? The difference is I work with you one-on-one in addition to group sessions, and the length of the course with annual follow-up. We concentrate on the instrument of your choice. In group sessions, we concentrate on S&P, but I never have a problem when students asking me questions in classes about other instruments. So, again, Lorraine and this other guys advised it's the settings on your computer. You need to adjust screen sharing settings. So, if you would like to join us in the room tomorrow morning, you come to the website. Here's the info about the room. I highly encourage you to review what to expect in the trading room. Thank you, traders. Any questions? Never hesitate to contact me info@fibainstitute.com, 925-257-4298. My joy and pleasure. Yes, pretty please, if you come under about review webinar about Fibonacci method and review YouTube channel, multiple videos, including multiple webinars. The difference between webinars is the different questions you ask. Multiple videos going back years on YouTube channel. So thank you traders, thank you so much. Look forward hearing from you and look forward seeing you in education course. Thank you.